Welcome to Business Line's State of the Economy podcast, where you'll find insight, analysis, and the story behind the numbers.
Hi, listeners. Welcome to Business Line's State of the Economy podcast on commodities. Gold has been volatile so far in 2024, with prices touching a record $2,450 an ounce. They have dropped over 5% since hitting the peak. Prices are still elevated though. Geopolitical tensions, currency movements, and US Fed rate cut plans have been behind this sashaying of the precious metal. India is entering a crucial festive period shortly. How will gold behave for the remainder of the year? What are the factors to consider? To respond to these issues, we have with us Dr. Renisha Chainani, Research Head of Augmont, one of India's largest integrated gold players from refining to retailing. Welcome to Business Line State of the Economy podcast on commodities, ma'am. You have been in the precious metal industry for quite some time. Now, this year particularly, we have been seeing gold zigzagging a lot. How do you see gold behaving for the remainder of the year?
Thanks for inviting me. Yes, it's been almost 2 decades in this precious metal industry and doing research on gold and silver. So talking about 2024, as you're saying that it has been a zigzag way, yes. 2024 started with gold prices with record high, around 63,000 rupees per 10 gram. So we saw two run-ups this year. The first run-up, gold surged 18% from Feb 14 to 12th April, and it rose around 12,000 rupees, hitting all-time high of 74,500. And the second run-up we saw in May, where gold prices touched record high on May 20th, the same high. So we have seen two highs this year, same highs. The reason for both run-ups have been the same. It is escalating Middle East tensions, Chinese gold rush, record purchases by central banks, and then we have concerns over sticky inflation, soaring US government debt levels, and expectation of monetary easing globally. Now, if you look at the second half of 2024, first half is almost coming to an end. So now gold prices have stabilized. All positives have already been discounted in the prices. In fact, a few new negative triggers have emerged. And that triggers are like, one is Fed stance has changed from dovish to hawkish now. The rate cuts that were being planned in March that were postponed to June, and now it is to September, and that too inflation dependent. So from 6 rate cuts expected this year at the start of the year, we are now expecting only 1 rate cut. Second negative trigger is that dollar index is still very strong. It is around 105 levels. So it's in short term, if you look at gold prices are stable and will be under pressure for next 1 or 2 months, I suppose. And we might see somewhat correction due to weakening fundamentals and technicals, but medium to long-term view is still very positive. I'm expecting new record highs in the last quarter of 2024. We have US elections in November, which is going to bring a lot of uncertainty and volatility in gold prices. But as demand is very strong, I'm expecting record high prices in the last quarter of 2024.
Central banks were behind the gold run of the precious metal, but there seemed to be a sudden pause in May. Why did this happen, and will it resume?
Yes, you are right, and very right question. Central banks have been the main reason for boost in gold prices, not only in 2024, but also in 2023. Gold rally actually started in 2023. In 2023, we saw that central banks added around 1,037 tons of gold, and it was the second highest annual purchase in history, following a record high purchases of 1,082 tons in 2022. 2024 has been very strong. Jan to May purchases, if you consider, it is around 400 tons. So again, expected that this year we are going to see central banks adding more than 1,000 tons of gold in their reserves. Again, this would be a record year of 2024. So which are the countries where central banks are buying? They are Turkey, China, and India. These are the largest buyers of gold in 2024. And in fact, World Gold Council came up with a report yesterday that they have surveyed various central banks, and they show that central bank showed 29% of the chances that they would again buy gold and boost up their gold reserves in next 12 months. So this year is going to be very strong for central bank buying again. And as you said, there seemed to be a pause in May, but it's only Chinese central bank that has paused its purchases in gold in May month. Not all the central banks have paused. Other central banks are still buying it. And the reason why Chinese central bank has paused this purchase, it is mainly because gold prices have touched record high of $2450 in May month. And it might be the reason, right, that Chinese central bank is waiting for a right price and they want the prices to correct a bit and they'll again resume the purchases. So after buying for continuously 18 months, they've just paused a month or a two. And I think they'll again come to buy gold at lower prices. And if we see a correction, I think there is a lot of de-dollarization happening at the central bank level. Central banks are reducing dollar reserves and adding more and more gold. So this trend is a long-term trend. I don't think this will stop in short term. This trend will continue at least for some time.
Ma'am, you talked about the WGC report. It also talks about different viewpoints with the advanced economy and the emerging economies with regard to gold purchase. Can you throw some light on that?
Central banks of emerging countries are buying a lot of gold from last 2 years. This is the main reason that we have seen central bank buying at record levels. It is mainly because of de-dollarization, as I said, and most of the emerging market central banks want to diversify their reserves. They have in fact reduced dollar reserves in last 15 years from almost 71% to 58% now. And the gold reserves, their ratio has gone up from almost 9% to it is 17 to 18% now. So all the emerging countries, central banks are diversifying their reserves. They want more and more stable things in their reserves. And as after this Russia-Ukraine war, and as we saw, there were various sanctions that were put on Russia. So most of the emerging countries are looking for a stable reserve, and that's why they are diversifying from dollar to gold. So this is the main reason that is supporting gold prices.
Ma'am, how have been gold imports into India so far? And any particular reason you're seeing either up or down for them?
Yes, so we are an importing country. India imports around 700 to 800 tons of gold every year. For this year, up till now, from Jan to May, we have imported around 260 tons of gold in comparison of 200 tons of gold that was purchased in 2023, the same period. Now, for last year, 2023, India imported around 743 tons. Even this year, it is expected 750 plus number could be achieved because demand is very, very strong. While cultural affinity for gold remains a significant driver for demand, especially in countries like India and China, the recent surge in gold imports can be attributed to a combination of various economic, geopolitical, and market factors. So if you consider like we have rising inflation, economic uncertainty, geopolitical tensions, and currency weakness, and expectation of low interest rates, there is increased investment demand, and the technical usages are increasing in gold. This all will play a role in growing appetite for gold. And this factor together creating a compelling case for all this heightened demand and subsequent rise we have seen in gold imports. So we'll continue to import gold more than 750 tons this year. That is what is expected.
Ma'am, your company Augmont has some experience with regard to digital gold. So how have digital purchases of gold been in India so far? What are its advantages and disadvantages?
Yeah, so after COVID, we have seen that consumer preferences in shopping has changed a lot. And Gen Z and younger generation prefer to shop online at the comfort of their home anytime during the day. Even at 2 o'clock at night, they want to shop. So same goes with the shopping gold jewelry and gold for investment. And India is the market, which is one of the largest digital consumer market in the world. We have cheap data, smartphone usage, digital payments, adaptation of new technologies. All this have spurred digital consumption and online shopping. So digital gold is a cost-effective way of purchasing 24-karat gold online in small fractions with as low as 1 rupee. The advantages are it is secure, it has the secure storage and genuineness. With digital gold, all traditional functions of physical gold, like buying, selling, converting into jewelry, gifting, using as a collateral, all this can be executed faster and more efficiently and significantly at lower cost. These transactions can be conducted entirely through your phone, eliminating the need to visit to physical stores and lockers. So if somebody wants to buy digital gold, they can log on to Augmont app or website, and in just few clicks and basic KYC, even without having any Demat account, one can invest in digital gold. So one of the major disadvantage with digital gold is only that it has the lack of regulatory agency governing it. Having said that, this market is very much self-regulated, and digital gold companies have appointed independent trustees who on timely basis make inspections and check the amount of gold stored in the vaults. So it is very safe to buy digital gold from authenticated company like Augmont with as low as 1 rupee and with very less, or you can say very basic KYCs.
Ma'am, the festive season is set to begin in the country. So how do you see demand for gold during this festive period, which is going to last, say, until December with Christmas around, with Christmas also on? I mean, I'll go again on this segment. Ma'am, the festive season is set to begin from the second half of the year. Now, the festive season starts with the month of Shravan and then extends up to Christmas. So how do you see the demand for gold during this period?
Yes, you're right. The period from August to December traditionally marks an auspicious time to buy gold in India, in Western countries also. And it is driven by festive season, then wedding seasons, and this boosts the gold demand. So first half of the year, whatever demand we see, the double the demand increases in the second half. And along with the rising income levels that we are seeing and increasing purchasing power among the buyer class, I foresee that this festive season is going to be one of the best. And as COVID and pandemic has spurred the digital transformation of the industry across the globe, today what works is a hybrid model, which allows customers to go through the brand's inventory and then reach the store for a proper jewelry buying experience. I'm talking about the gold jewelry buying. So hence, what do the people do now? They do the online browsing, select whatever they want to buy, and then they go offline if they want to feel or see the touch, or if they want to see how the article looks like, and then they buy it. So this is a new way of jewelry shopping. This allows them to make a finer selection, fulfill their jewelry needs better, and reduce their time at the store. So offline shopping, online shopping, lot of digital penetration, this all is going to be the reason where we'll see good demand for gold even in these festivals. Basically, we have seen earlier only physical buying was there. No, in festive season, people used to buy only physical coins in bars. But now people are moving towards digital form of gold purchases. So I think gradually we have so many investment options, like we have digital gold, gold ETF, SGB. All these options are also available, which help the users to buy anytime, whenever they want to buy gold. So we are expecting that this festive season is going to one of the best, and very good demand could be seen.
Thank you very much, ma'am, for your insightful views. We hope our listeners would have benefited from your views. Thank you very much.